Most people think the stock market is just a giant casino. But the truth is, it's the single most powerful wealth-building machine ever created. So, how does it really work? Why is this important to you? Can you really make money, even starting small? Welcome back to the Think and Get Rich channel, where we break down money, investing, and the economy in plain English. Today, we're pulling back the curtain on the stock market, what it is, why it exists, and how you can use it to grow your wealth without falling for the hype. Hopefully what we cover makes sense, but any questions or challenges feel free to ask in the comments. At its core, the stock market is a marketplace where people buy and sell ownership in companies. These are called shares. When you buy a share of Apple, you literally own a tiny slice of Apple Inc. If Apple makes money, you benefit. But why does this system even exist? Companies sell shares to raise money, which funds new products, stores, or technology. Think of Tesla. When it needed billions to scale up production, it raised that money by selling shares, not by taking out a massive loan. The price is a reflection of where people and markets think a company is going, influenced by many elements from the CEO to general market dynamics. Investors buy shares to grow their money, making profits through rising stock prices and dividends. If you bought Amazon in 2000, a $1,000 investment could be worth over $1.5 million today. Everyone needs to do their own research. This is not financial advice, but I prefer a buy and hold approach. Stock prices don't move randomly. They rise when more people want to buy than sell. If good news hits, like record profits, demand spikes and prices go up. Sometimes the stock market can feel like just emotions and hype, but there is a lot of science and math that goes into. Short-term, emotions drive prices. Long-term, the real driver is company performance. Warren Buffett's philosophy: buy good businesses and hold them. It's not a casino. It's a system that connects businesses who need money with investors who want to grow their money. When used wisely, it's one of the few tools that lets regular people build wealth over time. Time is often one of the key elements. The longer you are invested, the greater the impact of compound interest. Albert Einstein said, "Compound interest is the eighth wonder of the world." I could do a whole video on compound interest, and in fact I will, but here is an overview as it really is part of the key in my opinion. Compound interest is often called interest on interest, and it allows your money to grow exponentially. Unlike simple interest, where you earn interest only on your original amount, compound interest adds each period's interest to the principal. Imagine investing $1,000 at 5% annual interest, compounded once a year. Here's how it grows. After 3 years, you don't just earn 150, you earn 157.63, showcasing the power of compounding. Time acts as the biggest multiplier in investing, leading to exponential growth. For example, $10,000 invested at 7% interest can turn into $76,122 after 30 years due to compounding. The frequency of compounding significantly impacts your wealth. More often means faster growth. The rule of 72 is a quick shortcut for doubling your money. Divide 72 by your interest rate. This matters because early and consistent investing can lead to remarkable benefits. However, borrowing can also lead to burdensome debt, as compound interest can work against you. The bottom line: start investing early, stay invested longer, and let compounding do the heavy lifting. How does the stock market really work? It's a giant marketplace powered by supply and demand. If this helped clear up the mystery of the stock market, consider sharing it with others. This content is crafted to enlighten and inform as we explore the world of investing. Remember, investing involves risks. It's crucial to conduct thorough research before making decisions. Consult with a qualified financial advisor to help guide your journey. Stay tuned for more valuable insights that simplify money management.